Look, I mean, this is probably the darkest chapter for Cook and Apple in the modern iPhone history. It was a massive miss for the December quarter, with China as the key culprit. I mean, China revenues essentially missed by 40–50%. This was really a gut punch to the street. And even though expecting soft numbers, this was really even beyond the realm of negative possibilities. I mean, look, an 8% revenue miss for Apple is in the last decade. That's really unheard of. I think it just speaks to how demand for this latest iPhone, especially in XR in China, really was met with minimal demand. And fundamentally now going forward, it looks about 20 to 25 million iPhones less will be sold from Apple. And that's something which is going to have ramifications across tech, including semiconductor and chip names. But what's really happening is customers are not upgrading on this latest cycle, and a lot of it's pricing. I mean, Apple shot themselves in the foot, in our opinion, with a phone above $1,000, and in China is where it really backfired this quarter, and you've seen the damage in the what I view as Armageddon-like numbers. There's a feeling that Apple is not going to cut prices and not going to do the mea culpa, and that's something that they need to do in order to get this back on the right direction, stimulate demand. Blaming the macro card, it sounds good for a press release, but ultimately it's not something investors are going to buy into. And so at this point, it's more of a demand than a supply issue, but nonetheless, if tariffs and the trade war increase, it could only get worse for Apple.